Are you wondering what's going on in the real estate market right now in Toronto and Mississauga? If you are, stay tuned because this video is for you. I'm Chris Cucoch from Royal LePage Signature, and I run a real estate team here in Mississauga in the west end of Toronto. First, let's talk about what's been on everyone's mind lately, and that's the interest rates. So in June, the Bank of Canada lowered the interest rate by 25 basis points to 4.75%. Depending on which economist you talk to, we are expecting several more drops between now and the end of the year. A few of my personal favorites, I never thought I would have a favorite economist, but it turns out that I do. There are 4 more Bank of Canada meetings between now and the end of the year, and Benjamin Tall from CIBC is predicting that we're going to have 4 more quarter point decreases, which I think is maybe a little overly optimistic, but I would love it if that were to happen. Sherry Cooper from Dominion Lending, who's another one of my favorites and tends to be fairly conservative, is predicting that we'll have quarter basis point drops 3 out of the last 4 meetings this year. I personally am thinking it's going to be more like 2, even though I would love to see 3 or 4. I think July is almost a certainty where we're going to see the numbers come down. Based on all of the indicators that we've seen, including the jobless rate, which I found to be a little bit striking. The number was almost 320,000 people jobless in the city of Toronto, and that is the population of the entire city of Buffalo. Again, this is my opinion, but I think that there's a decent chance that we will have another quarter point decrease in September, and then we will reevaluate what things look like going into the end of the year. But many, both in the economist and the real estate space, are predicting that it's going to take about 100 basis points in total, or a 1% decrease in the interest rate, in order to have a substantial and sustainable effect on the real estate market. What we've been seeing out there on the road is a lot more buyers are interested in buying and getting involved in the market. But they're waiting for the rates to come down a little bit more, and or they are just not quite qualifying for what it is that they want to buy yet. So I think that every time we have another quarter basis point decrease in the rate, we're going to see another tranche of buyers come back into the market. But I don't think we're going to have just a flood of buyers coming in and sending the prices crazy again. I want to give a shout out to my brokerage, Royal LePage Signature, for putting this chart together. I think this chart is awesome, and I'm going to show you a little bit about what's going on. So you can see at the start here, this was March and April of 2020 when the pandemic happened. The red dots are the average price of real estate across the GTA, and the blue dots are the interest rates. So you could see in March, real estate market kind of stopped for a little bit. The price came down, and then they brought the interest rate down substantially to almost 0. And you can see it kind of took off again. There always tends to be a little bit of a dip in December. And it continued to climb until they started raising the rates. As you can see, as the rates went up, prices started to come down. Back in February and March of 23, remember they paused for the first time, and the prices started to shoot up again. They were not quite ready for the rate to hold. In fact, they had to increase the rate a couple more times just to get it to where they need it to be. Once they got up there, you can see the rates came down and they started to trade somewhat sideways for a little while. And then the last couple of months, we are trending slightly upward in prices, even with the flat interest rate. And as it comes down, I think we're going to start to see the rate continue up. I think we'll see the interest rate to trend down over the next few months, and the price of homes to trend sideways or slightly upwards. No climbs like this, just like nice, sustainable sideways growth. Okay, let's look at some of the numbers. Year over year, we are down in the GTA to 6,200 sales, which is down about 16% from June of last year. If you look at the number of active listings, which is a number I like to keep my eye on, we are up quite a bit from June of last year, 67% to 23,600 listings. The average price is down about 1.6%. It's about $1,162,000. And if we look at the median price, which is not on the chart, that's down about 2% as well. I like to check the median because I think it gives us a little bit more accurate depiction of what's going on, because it filters out the really high end and the really low end and kind of brings it into the more of the average of what we're seeing out there. And the average home is on the market for about 20 days. Okay, those numbers are for across the GTA in general, but let's drill it down a little bit and look at the 416. So sales are down about 21% to 2,236 in the month of June. The average price in the month of June was about 1,173,000, which is up about 2%. But if you look at the median, it's about 930,000, which is down about 5%. So again, the reason for the variation is we probably sold some really expensive properties in Toronto, which happens, and it pulls up the average a little bit. I think the median tells a more accurate story, where we're probably close to flat or down a little bit. Number of listings is up quite a bit, 620%. To 9,623 listings, and we'll see in a minute that the vast majority of that is going to be downtown condos. There's about 4.3 months of inventory, and the average home is on the market for about 20 days. Now, again, months of inventory, that tells us anything between like 3 and 5 tells us that across the board, it's a balanced market. Once we drill in, you'll see that that's actually the average of all the properties. So I think we've got quite a bit of a buyer's market in condos and pretty close to a seller's market on the rest of the freehold properties. Okay, next let's look at Mississauga. In June, we had 552 sales, which is down almost 19%. We were about flat or down 1% on the average price of about $1,000,001. And we had our median price of about 998,000, which is up about 0.5%. So I would say it's pretty accurate to say that pricing was flat year over year in the month of June. We're up 66%, huge difference between Mississauga and downtown Toronto, up to 2,041 listings, and months of inventory are 3.7. So we are in the low end, almost seller's market, but in the balanced market territory. An average home in Mississauga was on the market for 21 days. Okay, so let's get into the Mississauga and Toronto micro markets. I'm not going to cover them all because I'm not trying to make this a 15-minute long video, but I will pick a couple of highlights from both Toronto and Mississauga to show you. Let's take a look at those Toronto condos. So we sold a little over 1,000 condos in June of this year, which is down almost 30% in sales volume from last year. The average sale price of a condo in Toronto in the month of June was about $765,000, which is down about 1% from June of last year, but it's up 7.5% from the beginning of this year. And the median price was about $650,000, which is down about 4.5% from last year. But what's really interesting is the amount of sitting inventory. With over 6,200 listings, we're up 86% from June of last year, which gives us over 6 months of inventory. No matter which economist you talk to, we're very clearly into a buyer's market in Toronto condos, and the vast majority of this sitting inventory is in the downtown core, in the CO1 and CO8 areas. And I think there are some tremendous opportunities out there for a first-time home buyer or for an investor, because these are trading very low compared to what it costs to build them. So we're looking at about $850 a foot for a Toronto condo right now, and it's costing $1,300 to $1,400 a foot for the builder to build them, just to break even and not make any money. So because they're trading for so much lower, the builders are not building them. So you're getting it at a 35% discount from what it would cost to build it. And in 3 to 5 years, when these new builds that they'd be selling right now would be coming to market, they're not going to be coming to market, so there's going to be less inventory than we're used to having. I think over the next couple of years, there's a really interesting 3 to 5 year play here, but you're going to have to move on it fairly quickly. I don't think it's going to stay like this forever. In contrast, the semi-detached in Toronto only have 1.7 months of inventory, very well into seller's market territory. Now these are still getting multiple offers and there's upward pressure on pricing. The average sale price of a semi in Toronto was about $1,280,000, which is up about 9.5% from the start of this year. And the median is actually right around $1,280,000 as well, which is up 16% from the start of this year. Lots and lots of growth in the semi-detached. In Mississauga, we've got a similar story with about 1.89 months of inventory in the semi-detached. Same kind of thing going on, lots of bidding wars, lots of upward pressure on pricing. The average price is up 9.5% to about $1,040,000. I'll touch quickly on the condos. We've got a similar story that we have in Toronto, although not quite as extreme. The average price of a condo in Mississauga in the month of June was about $626,000, which is down about 1.6 from June of last year, but it's up about 2.5% from the start of this year. And the median price stayed flat at about $600,000. We have about 773 condos on the market in Mississauga right now, and we've got about 5.4 months of inventory. So it's not quite as intense as what's going on in Toronto, but still a lot of inventory for the number of buyers and some downward pressure on the pricing. We sold 224 detached homes in Mississauga in the month of June, which is down about 11.5% from June of last year. And the average sale price of the detached was about $1,550,000, which is down about 3% from June of last year, but up 14.5% from the start of this year. And we're still carrying quite a bit of inventory with about 750 homes on the market and about 3.4 months of inventory. So we are just kind of flirting with balanced market territory in the detached homes. So what does this mean for you? Well, it kind of depends. As I mentioned before, if you're a first-time buyer or an investor looking to get into that condo market, now is your time to shine. There are some great deals out there. I wouldn't say sell a condo to get a condo. You may have it on the market for a while. In particular, condos that have tenants in them are almost impossible to sell right now because people don't have to deal with the hassle, so they're just not doing it. If you are a mover upper, if you're moving up from a condo to say a semi-detached or a detached, now is probably not the time to pull the trigger. You may be okay if you're going from a condo townhouse, but your condo apartment is going to be difficult to move. You're not going to get the best prices, and the semi-detached and the detached are quite a bit more expensive. There's quite a bit of a gap in there right now, and you just may have a hard time making that move. If you're a seller, if you're selling your condo, again, now is not the time. If you don't have to sell it, please wait. However, if you have a semi-detached or a detached home in a desirable neighborhood and everything looks good, now is a good time to be on the market. With the fall market coming up, I think is going to be the ideal time to be selling. In fact, if you could optimize for real estate, I would say I would aim for that second week of September. Let's get the kids back to school. 2 more Bank of Canada rate decreases hopefully by then, but definitely 2 more meetings. That gives us a chance to have all of the economic factors going in the right direction to get the best possible price for your home. If you would like to get a little bit of information that's more specific to your situation, there is a link in the comments that you can book a call with me. Super easy. Click the link. You can book yourself into my calendar at a time that's convenient for you. We'll get on the call. We'll talk. It's not a sales call. There's no pressure. Just a couple of people talking, a little exchange of information, and I hope that I can give you some value. Also, if you're interested in what your neighbor sold for, we've got a new app called the Listed app. There's a link to that in the description as well. Feel free to go ahead and download it. I've bought it for all of my clients. Anybody that's a member of the YouTube channel is also welcome to use it. It's got for sale data. It's also got sold data. So think House Sigma without House Sigma getting all your data. Just one more thing that I like to provide to add some value to my community. Like I said, the link is in the description. I hope you found this video helpful, and I hope that you have a great day. See you later, guys.